Today's market call is brought to you by MoneyLion, the first digital ecosystem for consumer finance, empowering everyone to make their best financial decisions. As Van Halen said, I don't feel tardy. However, this morning I am, as it is now 11:01 on the East Coast. Apologies. That was because I was talking off Dan's ear and Carter Braxton Worth's ear. They will be here shortly. The final week of July market call. Hello, Dan.
Honestly, that's probably one of the worst Van Halen. I know you're a huge Van Halen fan. That is one of the worst Van Halen. So, what is that? Hot for Teacher? Is that where you were?
I don't feel tardy.
Horrible.
You know how many times I've said that over the years? I brought a pencil.
Yeah.
Give me something to write on, man. That is one of the great videos.
That might as well have been a Van Hagar song.
No. Okay. I'm going to stop you right there.
Yeah, we don't have to go there. All right, guy, we got a lot to do. We got Carter Braxton Worth, as you just teased. He's got a lot of really interesting comparative charts of what's going on in some of the indices and some of the big drivers of those indices. We're going to go through that. He's also going to take a look at the KRE, which is the regional banking index, versus the BKX. And Guy, we might even have a curveball for him as we are looking at some of the charts here too. So who knows?
Why wouldn't we? On the day after the Hall of Fame induction ceremony, throw a little Uncle Charlie. By the way, I know, sorry to do this to you. Met fans should be embarrassed, as they typically are. I mean, they're playing good baseball, but, somehow taking ownership of Billy Wagner, who basically played, the final few years of his career at Shea, it's embarrassing. It's like the Yankees. It's like if Yankee fans said, "Oh, we got Ichiro in the Hall of Fame." It's embarrassing. Back to you.
That is. All right. You
don't care. Okay. No, you don't care.
You actually haven't said the word Mets on one of our programs in months. Great. No, it's great. We're going to hit also some of the trade stuff. Let's bring Carter in right now so we don't leave him waiting. There he is, Carter Braxton Worth.
Thanks. How are you?
How are you, man?
Happy Monday.
All right. Thanks for being here. I got in my email box this morning, I think a great report from worthcharting.com. By the way, people, if you want more of Carter Braxton Worth, more of what you see him on Market Call or on CNBC's Fast Money, go to worthcharting.com. It's one of my first reads.
Nothing fancy.
You can have nothing fancy, just charts there, people. So go check that out. He does great work, he and his team. So we appreciate him being here. This morning, Carter, this caught my eye because we hear every morning S&P, NASDAQ, they keep making new incremental highs, just kind of ticking higher, not big moves one way or another. But you're looking kind of under the hood, I guess, at some other, big drivers, the S&P 500, but also the Dow Jones Industrial and some of the things that have not made new highs yet. So walk us through it here, man, because this is some good stuff, because a lot of folks, what did you say? It's the moment of truth, or will they, won't they? What was the
meaning there's all these articles over the weekend, the biggest week ever because of FOMC on Wednesday, because of GDP on Wednesday, because of payrolls on Friday, because of earnings throughout the week, because of tariff expiration August 1st. These are all items that can inform the market. But what's really important is the juxtaposition of the market, which is slightly above its prior high pre-tariff sell-off. And you see that here, the S&P 500 up 3.9% from that prior, versus what I listed as the most venerable index, not there yet, the most popular index, not there yet, and then the S&P 500's Nemesis 1 and Nemesis 2, two indices. So let's go through them. So this is the S&P. We see it here. The next chart is the most venerable, right? This is the oldest index of all. Goes back to 1896, I believe it is, and it has not made a new all-time high. So the report was saying that this is a key juncture. In principle, you play this kind of setup for a presumptive breakout, but not all breakouts occur. This needs to go higher, whether it is because of FOMC or not, bad or good, or earnings bad or good, or tariffs bad or good, or GDP bad or good, so forth and so on. But the setup is very important relative to the S&P. So the most venerable index has yet to recoup and make a new high. Now look at the most popular index. I mean, these couldn't be different. The beta, this is the most popular. This is where all the money is. And it is itself has not made a new high. Now let's look at Nemesis number 1. This is the S&P 400. The reason I use Nemesis, the S&P 400 is ahead of the S&P 500 since inception, which no one would win in one of guys' bingo card things. No one, right? You'd never guess it. And then the next one, nemesis number two, just like the Dow, right at the former high, just like the Magnificent Seven, this equal weight, and the equal weight is also outperformed, which no one. So let's look at the comparative chart that comes up here. So you could say, well, where did you start it? You can only start something as far back. So comparing Microsoft to, goes back to the 1980s and earlier, to Tesla, which doesn't, you have to compare them when Tesla first went public. Yes. Okay. So the inception of the S&P 400 mid-cap index was launched on June 19th, 1991. And if you look at that and you put that in a thing, has the S&P underperformed the mid-cap, you'd say not a chance. And yet the mid-cap has almost doubled the performance of the S&P. And in turn, since that same start point, the equal weight has handily outperformed the S&P 500. And what's so interesting is, back to those original charts, the equal weight, the Magnificent Seven, the Dow, the S&P 400 have all not yet made a new high. So it's a curious juxtaposition. It is the single most important thing on the week. These indices need to make new highs to confirm, almost like Dow theory, right? Transport's confirming the move of the industrials. The new slight new high in the S&P, 3.9% is a slight new high.
So how long do you give it to? I use the saying, and I'm not suggesting you agree with it, but I'm of the firm belief that the market doesn't give you ample time to buy the lows, nor does it give you a lot of time to sell the highs. So if in fact this is a big week and we fail here, is that sort of the timing mechanism you're looking at? Does my sort of premise make sense that the longer it sticks around up here, the more apt it is to continue higher?
The case can be made that regardless of what happens this week, that this is an intermediate high or a point from which some sort of give back is likely. So let's run through that. Scenario one, all those things aforementioned, right, are good. FOMC is somehow good. GDP is good. Whatever you define as good. Earnings are all good. Tariff resolved August 1st is good. Good, good, good. And the market has a big week, up 3, up 4, maybe up 5. Case we made it, then that's it. We've even had a blow off yet further higher from the April low, and that there's nothing left to see through the rosy glasses because everything's rosy and everything's been seen. Scenario two, something doesn't go right with all of those things or a lot of those things, and we start drawing down here and now, whether it's tomorrow morning, Wednesday, or in response to what are all of the things coming up. But whether it's end of the week strong, yet one more week, but we falter right here and now in the course of the week, one can make the case on a calendar basis, not because there's something about the last days of July or August, but from the April low, it would be perfectly normal and likely to get some counter trend in this very steep uptrend in effect since the April 7th low.
Yeah, you know, one of the things that stuck out, and Guy's been making this point too, every trade deal that we walk in on Monday morning, the market has had kind of less and less of excitement in and around that deal. Look at Google last week, their earnings looked good, the guidance looked good, the stock barely closed up after, a day and a half, that sort of thing. I mean, we're gonna, Guy, you've used the term, we're getting a little desensitized to that. We have Amazon and Apple and Microsoft and Meta, the bars are kind of high, the stocks have had big runs, so it'll be interesting to see how investors meet that, let's say Fed Chair Powell doesn't budge, he's wait and see, that sort of thing. Let's say the jobs data on Friday is just right in there, so like, to your point, I think it's probably going to take a meaningful change in the news flow out there, in my opinion, to get a massive breakout, let's say in the Mag 7 or the Dow Jones Industrial Average or the equal weight.
Yeah, and also it's like, what would be the news? One would say, well, earnings are coming. That would be not the case. Earnings are passed after this week, essentially. One could say, well, tariffs they're not coming. They're almost done, right? EU, Japan, whatever it is, good or bad, whatever the number is, 25%, 1,000,000%, 15%. That's not coming up. That's rear view. FOMC's FOMC will be rear view. GDP will rear view. What is the news item that would compel it yet higher? And then we'll say, what's the news item to have it break? Well, there's something called gravity, right? You can just have outflows from time to time. And that's what happens the steeper you go, right? You get some sort of normative drawdown. How to define that? Is it 3.5? That's nothing. Is it 13? That's more meaningful.
Yeah. So Carter, one of the groups that has really stuck out to us because they got, earnings season kicked off was banks. And, there's,
and
JP
didn't
Morgan.
do well, right? In response, earnings, good or bad, they did not do well in response to the earnings.
Well, initially they didn't, but then they kind of have come back, you know what I mean? And have been a little bit of the leadership here over the last couple of weeks or so. So tell us what you're seeing a little bit with the BKX versus the KRE, the regionals.
Yeah, here, I mean, let's put some lines in. So that's a blank chart. The first way to draw the lines, at least what I see, you'll see it here, is that sort of setup. The next set of lines is, you'll see it here. Let's put those two charts together. I mean, I think generally speaking, one wants to be long something that exceeded it, broke out from a range of 7 to 9 months, checks back to the top of the range and goes again. The real issue is, and this is again here and now, as banks as an investment, that's a different matter. Let's look at a couple things coming up here. Look at so they're the same annotations. To get back, remember, we're still below the late 2021 high, which is so shocking. I mean, find individual stocks that are down over the past 3.5, 4 years. Usually there's something wrong with the business. It's Walgreens, right? It's it's Intel. What is the problem? The problem is these are not. This is the KRE. It's the same thing. So look at the BKX and look at the KRE. BKX is close, so we get probably to the high. That's 1.5%. Here's the real rub. Look at some more charts here. This is a 2-panel. That's that BKX toying with its former high of 2021. There's no alpha here. The bottom panel is the relative performance to the S&P. Now, that doesn't mean one can't trade one and make money, and this one's better, JP Morgan better than Citi. But as an investment, it's a disaster. I mean, it's just an unmitigated to say at the barbecue or say professionally at the portfolio managers meeting. Well, I've been massively overweight banks since 2018, and they're up. Yeah, well, it's just a terrible pick, as depicted by the bottom column. Look at the next chart. This is the real tragedy. Of course, that sell-off in the financial crisis, banks lost almost all their money, right? All their value, 85% decline. And their relative performance obviously was terrible. But basically, here and now, we're still below the financial crisis low on a relative performance basis. These are highly cyclical assets that can lose money. That hasn't happened in a long time. When I started, and I'll remember this, in 1989 in the business, and I was covering as a junior analyst covering some industrial steel companies, you'd have estimates out the next year where they're going to lose $4 a share, having made 11 the year before. People are like, what do you mean lose? That's what happens in a recession. A thing like Caterpillar loses money. That hasn't happened in a while, but that's what happens in cyclical because they hemorrhage money. This is not an investment. You can trade them, that's fine, just like airlines. But holding banks long term is a bust. Look at the KRE. Same.
Let me just stop you there real quick. Let me just chime on the KBW, and then we can go to KRE. You look at it, and obviously, all the names in the KBW. By the way, KBW, Keefe, Bruyette, and Woods for those playing our home game. But it's Bank of America, Citi, JP Morgan, Wells, all the names we've come to know. Quickly, Jacob or Steven, if you could pull up a chart of Bank of America, do it longer term. And I look at this and say, man, oh man, this is setting up for a bit of an epic double top. So Bank of America being a large component, we know that JP Morgan's in there as well. JP Morgan's entirely different, but you can draw the horizontal line across here going back, I think, to the summer of 2021. And we're at pretty dangerous levels here, Dan and/or Carter. So, Dan, I know you have some thoughts here, but I just wanted to really jump in real quick with that, Dan.
Yeah, I love what Carter's kind of detailing here is that from an investment standpoint, they have not been a great place to be over a long period of time, but they've obviously, proven to be really good trading vehicles. Carter, when you see a name like this that was obviously, impaired going back 15 years, some of these one, like, what do you do here? Because the idea of playing Bank of America for a breakout after this 5-year period, you just said it yourself. Think about this. This is hard to find too many stocks that are down, from 2021 levels. So Guy brings this one up. He's been actually bullish of Citi, and that's outperformed a Bank of America.
Yeah, I mean, this is the very picture of the BKX. If you jump to BKX has yet to take out its 2021 highs, early 22 highs, and in turn, here's one of the constituents that hasn't either, and the carry is well below. So that's the question. Financials have outperformed. The banks have been much better than insurers. So if one is a FIG analyst, right, and one is trading only financials professionally or personally, there are places to always be overweight and underweight. But I get the point I was sort of trying to drive home is that it is conceptually think, oh, I'd want to be long Goldman Sachs forever. These are the smartest people in the world, all of whom could have been scientists or doctors, and they went down because positive selfishness and wanting to make a great living, and they're there, and they're analysts, and they're bankers, and they're great private equity stars. And it's more instantly adjusting for inflation. Goldman Sachs, they're below their prior peaks of the .com. I mean, it's just not. They're not good investments.
Before I cut you off, you're going to get into some relative performance, KBW versus KRE. So go down that road, please.
Yeah, I was looking at the KRE. If you look at some of these two panels, so this is the KRE, and look where it is. I mean, it's below the financial crisis low of 2009. Again, these are even more. And then we had that whatever that kerfuffle was, right, about a year and a half ago, where didn't all the money, what did SIVB or whatever? It turns out you can pick up your phone and take all your deposits out. I mean, that's scary, right? It would be like, what's your business then? Just a bunch of branches with windows.
Yeah. You know what though, Carter, didn't even need a telephone. You just needed an internet browser to take
your millions.
And that, and you could do that over the weekend. Really appreciate all that. Great insight on the banks there. Appreciate it. Last one, we're going to send you a curveball a little bit. This one just kind of, I'm a fundamental guy, but, I like to scroll the charts here a little bit. This one caught my eye a little bit. This is TTD. This is the trade desk. Okay. This became, the guy and I have a great story. The day this company went public, the CEO of the company, they had just rang the bell guy. Is that right? And he wandered up to the set of Fast Money. And this was, probably a small cap stock then. It was probably hundreds of millions of dollars in market cap, but below $1 billion. And he came over to the set. He said, I'm a big fan, like Fast Money. And guy did his thing where he's amazingly gracious to someone like that. Asked him about his business. They gave him his card. He said, we looked up maybe like a year or so later. This is like a multi-billion-dollar market cap and on its way. Right now it's 42 billion and it was down. You can just see that. It's basically been cut in half from its highs. We just thought this was interesting. Those are our lines, not yours. That's the 150-day moving average.
It's the drop in gap, right? Those are going to be quarterly. That's a quarterly miss of some kind. Maybe it's the biggest beat ever. Was good enough. That's February, and then you've got a gap up in May. That's got to be noticed. That's 13 weeks apart. 13 as far as 52. Those have to be quarterly news. That's the way the game is. So I bet you quarterly earnings are coming up probably in a week or two. And the question is, do you have a strong enough move to fill the gap left behind from the February plunge? That would be a heavy lift. My hunch is to be long here for something along those lines, perhaps not that spectacular, but higher for sure.
Before we let you go, Carter, and I appreciate your time, we have a question about Citi, and I know you've made the point. If you look at Citi since 2000 and I don't know 10 or it's 8 or 9 or 10, it looks entirely different than if you look at it over the last few years. But with that said, the stock has had a pretty significant move since the lows that we saw in April. I think it was trading about $55 or so. So we haven't doubled yet, but probably up 43%. So the question from Steve Z is it time to sort of pull the ripcord here in Citi? Do you see anything in Citi, understanding where it was historically, that would make you sort of pull the ripcord here?
I think, Steve, you're honest. I mean, that's a fairly steep and uncorrected move. This guy said not quite 100%, but getting close. And, trimming for starters comes to mind. Maybe it's 10 or 12% or 15 or 20. Selling some calls on the balance, that kind of thing, acting in increments. You don't have to sell it all, but I would take measures.
Carter Worth, appreciate your time. As always, you are the man. Throw up the Carter slide, because if there's somebody new to the audience, they should see this old-fashioned technical analysis. Nothing slick, just charts. Great picture of you, by the way, with the pocket square.
Okay. All right, man. Thank you.
Thanks, Carter.
During the week. Bye.
Guy,
Carter is the man.
Have you ever worn a pocket square or no?
If I'm wearing a tuxedo, typically I'll have a little pocket square in. Short of that, typically not. But, listen, doesn't mean I shouldn't be wearing them or couldn't wear them. This was never my thing.
I don't know if I ever have in my whole life. And by the way, tomorrow we're doing some pictures for Fast Money. They want new headshots. I think they got sick of us from like the late aughts. You know what I mean?
Odds.
So I have to put a suit on. I don't think I've worn a suit. I can't remember. I only have one suit, by the way. After COVID or during, I just got rid of them all. So I have
Wow.
one suit, and then I also had that, the Ozempic thing, right? So I had to get
Hey,
rid of my
you got a
my old
different,
suits and
you got
everything.
you have a good fit. Isn't that
I have
what
a
you're
different
saying?
frame. I have a different frame now. So we got to put suits on tomorrow, guy. You might see us all knotted up in some of these podcasts around fast money. All right, let's do this. So one of the headlines in of this EU trade deal, and this was going back to the Japanese deal last week or whatever, like these commitments for these countries to invest in the US. And I don't know if it's the countries, it's got to be the companies, right? Like if you think about it, if you're going to be creating manufacturer capabilities, it's not like the Japan is going to be doing that. It's going to be some of their companies, right? And it's going to be the same thing for the EU. So if you're going to commit to buying $750 billion of energy from the US, it's got to be the companies for the most part doing that. I mean, I know that there's NATO and there's, purchasing of defense and all that sort of stuff. But this kind of got energy complex going a little bit here, Guy. Thoughts? Because I think liquid natural gas is going to be one of the main drivers.
Well, that comes out Chenier if you look at the LNG. But yes, liquid natural gas, LNG, the actual commodity has some pep to it as well. But it's a couple things. Politics aside, the EU is, what is it, 19, however many countries it is. I'm hard pressed to believe that each and every country signed off on this. So as you like to say, the devil's in the detail, number one. Number two, I do think to a certain extent on the margins, regardless of outcome, this is sort of energy friendly, which is one of the reasons I think that OIH seemingly has a pulse for the first time in a while. I think it's trading about 256 or so. Again, something that's been under pressure for a while, but it's been doing a slow grind since early April. My instincts suggest that will continue. We're in a pretty steep downtrend from the spring of last year that I think if we close above sort of maybe 260-ish or so, we will have broken. If you want to draw that trend line, we are through the 200-day move, or that's 150-day moving average, excuse me, but we're through that. I mean, I think it starts to get pretty interesting here, Dan.
Yeah, and this is one, it's been kind of unloved. And I guess if you're kind of in the camp that, growth is reflating and we're about to inflect, and, I'm not an economist. I have no idea. I was listening to reading Mike Wilson's note from Morgan Stanley this morning. He's their head strategist, friend of the pod. I respect his work. He did an about face on his bearish call. I want to say, about a year ago or so, and he's been right. And he was talking about, even when he was wrong in 23 and the 24, he was talking about a rolling earnings recession, right? Throughout different earnings or throughout different industries. And so, industrials is one of his picks and has been one of his picks, and energy on the cheap. If industrials are going to work, energy should work, right, Guy? If you think about it that way. And so this one, you see that downtrend, you see that moving average that's been resistance here. We're through it. So let's see where this can get going. And then on the flip side, well, not on the flip side, but you also have crude oil, and it's up a little bit today, 2.5% or so. Decent move for crude, especially when you're considering we don't have those geopolitical, headlines here, but also stuck in the mud here. And if you look at the XLE, are large integrateds interesting to you here, Guy?
They are, but they have been, and they haven't done really a damn thing for quite some time. I mean, there's your XLE, and if you look at it even longer term, you see we've been sort of, you like to use the term, stuck in the mud now for quite some time. The 200-day moving average is basically, well, that's the 150-day, apologize, but that's been, we've been either side of it for a while, and there doesn't seem to be any discernible pattern yet. I think in my opinion, you got to get this thing north of 95, and then maybe have some momentum to the upside. Short of that, it's just sideways action.
Yeah, it's just worth noting. I mean, a lot of folks, you keep hearing about the broadening out. Carter just went through the fact that the Mag 7 as an index had not made new highs relative to the S&P 500. There was a Heard on the Street article talking about all the different ingredients for, bubble watch, if you will. One of them was like talking about a broadening out, but energy really has not joined the party there. So, energy, I'm still on the sideline. I just don't find it particularly interesting.
No, and you've been right to be. It's not particularly interesting. The question is what will be the catalyst to get energy going? It's obviously not the weighting in the S&P 500. But I do think it could come in the form of a market sell-off where people look for areas that they can rationalize, or at least they can get their arms around valuation. So that's why I think one of the reasons energy could win here.
Yeah. And just really quickly, let's hit some names. We already mentioned that, it's Amazon, Apple, Microsoft, Meta. The last two are reporting on Wednesday night. The first two that I just mentioned are reporting on Thursday. Estimates, or the options market is pricing, let's say, between 4 and 6% for any of those four. So let's just call it 5% on average. I'd say after Google, Guy, and we were talking about this a little bit on the Risk Reversal pod this morning, but Google had a nice run into its earnings. The quarter looked fine. All the metrics that folks were maybe a bit worried about as far as search ad revenue and the like was fine. It was not growing, double digits or anything like that. But if you look at this thing, it has not acted particularly well. They reported Thursday after the close. Friday, it gave back all the gains. Here it is today. It's down a little bit. Would you say that expectations are high for, let's call it, Meta and Microsoft, which are probably tracking towards some of those same metrics as it relates to their cloud, and then maybe some of their AI sales?
I think they have to be high, given what we've heard about CapEx. All the different things we're hearing lends itself to expectations being very high for the names you just talked about. I'll say this about Google real quick. Throw a longer term chart. The fact that we were unable to, at least today or the last couple of days, to take out those prior highs that we saw back in February-ish, January, February, is, in a word, disappointing, but in another word, potentially really bad on a technical basis, because you can see that head and shoulders pattern that we've talked about. And you got to get this thing sort of above 198, a couple days closing above it, to then sort of broken this thing. But the fact that it couldn't rally in a meaningful way after that earnings release, which should have been a sigh of relief, is disappointing, in a word.
Yeah. One of the things that has been not disappointing, and there's just, it doesn't seem to be too much bad news. We don't have to go through NVIDIA, but, these export bans being reversed as far as their sales to China, that's been a good thing. That's been going on for a week and a half now. Stock has continued to move higher. The one that really sticks out to me, though, Guy, is AMD. And we keep hearing about the TAM. We keep hearing about the chips that are going to be competitive, and it just hasn't come. And here's a 1-year chart. You see that the stock is up more than, 100% from those April lows. You see where that 200, well, I think it's 150 down there at 115. They report on August 5th. Expectations are getting really high here. And let's be clear, they might see some improvement as far as some of the sales of some of the chips they're hoping to have compete with, some of the high-end GPUs from NVIDIA, but expectations are really high for this one also.
Yeah, and this is sort of deep end of the pool now, because to a certain extent, not entirely, but to a certain extent, AMD's been dragged up just with the rest of the space. So it's one of these rising tides lifting the AMD boat without question. Of course, the problem is when you get to these levels, you have to sort of deliver. And I'm not certain that they're in a place where they're going to deliver what's necessary to keep this move going. So I get the feeling, this is just me, I think you got to absolutely fade this move and look for a retracement back down to sort of a 50% level. So that's 125-ish, which probably sort of lines up with the 200-day moving average.
Yeah, no doubt. It's probably 120 right there. If you have the 115 is the 150-day. Let's look at Taiwan Semi for a second, because obviously this is the maker of 90% of the high-end GPUs that those folks are buying there from NVIDIA. I mean, this thing just seems like it's getting kind of tippy-toppy. I don't really have much more to say, and I just wanted to kind of flash that up there for a second. And Intel was obviously very disappointing on Friday, and you think, well, maybe they're going to finally get their act together. Some of the news under the new CEO would be setting the stage for some beats going forward. It doesn't seem like that's something that was really evident in the guidance that they gave and the commentary. And then the last thing, Guy, I just wanted to hit before we get out of here. So let's pull up Coreweave. This is CRW V, and this was a IPO obviously in the data center space. It was late March, and this became a meme stock, and it became no small stock if you think about it, right? It was gaining tens of billions of dollars, and you could have had all you wanted for it in the weeks after. Well, this thing is quietly down now for 40%, guy, and their lockup is going to come on September 24th. And I want to go to Circle. This was another recent IPO. This is in the crypto space, and this is also down about 40% from those prior highs. And the only reason I'm bringing these two up is that there's been a scarcity of new issues. So there was a lot of retail that went after these. We know there's small floats. Stocks went parabolic. Now they've seen that the fever has broken a little bit. And this has all happened over the last couple of weeks or so when we've seen Kohl's and we've seen Open Door and we've seen all these other small Krispy Kreme and all this other crap, GoPro and everything become meme stocks. So I just think it's interesting that folks are going for more speculative, where there's less kind of fundamental backing and coming out of these names, which for all intents and purposes have had lots of disclosures. If you're like working into your IPO and then afterwards, we're gonna have the first quarters or so. So you're seeing money come out of these big memes into some of these smaller memes.
You brought up Coreweave a number of times, and this sort of stealth move to the downside, understanding it had a ridiculous move to the upside, I think continues to worth watching. I don't know if it's a read through necessarily for some of the AI plays, but it's obviously not bullish for the AI plays. I'm not saying it's bearish yet, but it's clearly not bullish. So Coreweave is absolutely on my radar screen. I think it should be on everybody's, not to trade it necessarily, but maybe to get a tell as to what's going on. Real quick, we have a question about Fizer. I only bring it up because you like the kid Tim's Fizer, which we goof around on CNBC, but there's no compelling reason, I don't think, to be long Fizer. I think the stock made an all-time high. I want to say sort of early COVID, and it's been basically upper left, lower right ever since. There's been no meaningful bounce. We're trading at 24 and change. I think the low was $21 or so, and all bounces have been sold. So to answer your question, I don't see anything particularly interesting about Fizer here. That was a question we got.
Yeah, one of the things, guys, also interesting in the pharma space, I know it's an area you know pretty well. It just seems like when we were at the height of the GLP-1 trade, right? So it was Eli Lilly and Novo Nordisk. There were no shortage of other pharma names that were doing trials on sort of next-gen GLP-1, these weight loss drugs, right, for a whole host of other sort of ailments. And, the whole space, or it was just became very speculative. And then it got down to a bunch of these biotechs that obviously have no earnings and spending a lot of money, right, to kind of develop these drugs into trials and the like. And it just feels like the whole trade has fizzled right now. If we want to pull up an Eli Lilly and then a Novo, what's kind of gone on here. And I think this is just a really good sort of lesson, if you will, when you have a mania about a product that is a great product. You know what I mean? And it was just like, how many times were we talking about Eli Lilly, the growth rate there, trading at 50 times earnings, they have, all the market share, that sort of thing. And it's just done. I mean, the trade's done. You know what I mean? And then if you look at a Novo, which was the upstart that no one had ever heard of, right, until these drugs became very popular. I mean, look at that thing, and the bullishness all over the street. Now, granted, on the flip side of that, there's, I've probably tried to buy Novo a couple times here and there, and maybe it's been a decent trader, off of these lows, but it's upper left, lower right. And it just feels like the excitement in and around this trade as it becomes more mature, as far as from a product standpoint, is not that interesting anymore.
Yeah. And real quick, I agree with you. You're right to point that out. Valuation doesn't matter on the way up until it does. And now, in terms of the stock, I think the bloom is off the rose, and obviously not only in Novo, but in Lilly as well to a certain extent. And I don't know what the reacceleration is going to be to sort of, in my opinion, to be commensurate with the valuation that the stock trades at. So something's got to justify the valuation. And personally, I don't see anything coming down the pike. Real quick question about gold. Obviously, gold's pulled back. This trade deal has gold sort of on its heels a little bit. To answer your question, no. Nothing's changed in my view, Dan, at all. I think I'm pretty steadfast in that. Gold to me is still absolutely in play, and I think it's just building a base for the next leg higher.
Yeah, and I guess what, I look at this and I agree with your base. I agree with all the reasons why you want to be long gold. I mean, it's basing. I mean, let's be clear. And you see that rising moving average. It's at what, 30 or 3,000 right there, or something like that. I mean, could it get back there? If you go back and you look at that move that we had from the highs in, I guess, late April, early May, I mean, that was kind of a decent little move to the downside. So, I think you just keep reloading. I don't think there's anything going on that's going to change the course of the dollar in a meaningful way, right? In just a meaningful way. And so all these trade deals are weighing on the dollar, right? If you think about it. So,
by the way, and real quick before we get out of here, is the president, I think it was Friday, talking openly about how a strong dollar is not, I think I'm paraphrasing, but basically said, I'm all for a strong US dollar. However, a strong US dollar doesn't help us. So they're saying the quiet part out loud, as they say, and they want this dollar to weaken, and they're getting what they want in the form of lack of performance in US dollar, which is creating a bit of a tailwind for equities now. But I will tell you, if this trajectory to the downside continues, that tailwind is going to very quickly become a headwind, in my opinion.
Well, it's also interesting, and you mentioned this a few times. I mean, the consolidation, maybe they could pull Bitcoin up here for a second. It's just like Bitcoin had that breakout, you know what I mean? At what was it, like 110,000 or something like that. And it's been consolidating here. You see that uptrend that we drew there. And I listen, if it pulled back towards 105,000, it wouldn't be a problem either. You know what I mean? It just kind of, but it is interesting that all the excitement around these targets of 200,000, 250,000 or whatever in the next year or so, it seems like there needs to be a bit of a back and fill or consolidation before, you can realize some of these other sort of levels that some of the most optimistic folks have.
Jacob texted us about peeing on the rug. I think that is the dude abides, the Big Labowski quote, if I'm not mistaken.
Yeah, it is. We just talked about the Labowski the other day.
Well,
it was, I can't remember, it was a music lyric or something. I was in the car with the kids over the weekend, and I said, sometimes you eat the bar, sometimes the bar eats you. Now, that's a quote that is hotly contested from the dude. Is kind of, he's trying to make sense of that. The cowboy says that to him at the very end. He goes, "Okay, dude." And it's, I guess the debate is whether he says, sometimes you eat the bear, sometimes the bear eats you.
I think that's probably true. I also think, if I'm not mistaken, haven't seen the movie in a while, that's the great Sam Elliott, right? Is that correct?
100.
I love Sam Elliott.
Just not aged. I mean, if they did a redo of the Big Lebowski right now and they had Sam Elliott.
He's a badass.
He is a badass. He's the man.
I mean, not to throw out Sam Elliott roles, but Sam Elliott in Roadhouse, which, by the way, Patrick Swayze wanted him in the role. Genius, absolute genius. You don't care. You're not a Roadhouse.
Roadhouse sucked. I mean, let's.
Okay.
On a scale, like, as far as movies are concerned, let's say that the Big Lebowski is like a 10. Roadhouse is like 1.2 or something like that.
Well, we agree to disagree. I learned the song "All My Exes Live in Texas." That's why I reside in Tennessee from that movie. Never heard the song before. Prior to that, you don't care. Left boot, no.
Yeah.
All right, we got to get at him, Jacob.
All right, thanks everybody. We'll see you. We got Peter Bookvar's joining us for a new weekly segment on the Risk Reversal podcast. It will be in your feed tomorrow morning. Check it out. We'll be back here tomorrow at 11 a.m. Eastern. Thanks for being here. Bye.